Hello traders, you're welcome back to the Forex Geek channel. In this video, we are just going to be looking at the relative trend index. All right. Meanwhile, the relative strength index has been a go-to momentum indicator for years, but it has one big flaw. Which is the fact that it constantly gives false overbought and oversold signals. And that is the reason why in this video we are looking at an alternative which could actually be a better alternative, and that is the relative trend index. Okay, so I'm going to add the RTI to the chart right now. The relative trend index. All right. The relative trend index is a tool that improves on the relative strength index. Okay, so the RTI tries to improve on the RSI, all right, by filtering out weak signals and providing clearer trade opportunities. Stick around to see exactly how it works. Okay, now the relative trend index indicator is an advanced momentum tool that helps traders avoid false reversals and identify true market trends. So how does it work? Unlike the RSI, which only measures price movement relative to the past, the RTI adapts to market conditions, making it more accurate in trending markets. All right. Now, let me just add the RSI to the chart simultaneously, relative strength index. Now, unlike the RSI, which only measures price movement relative to the past, the RTI adapts to market conditions. Okay, and because of that, the RSI sometimes, which give false signals, can mislead traders. Doesn't mean that the RSI is not good. The RSI is a great indicator. Okay, we are just trying to do a comparison here, right? Okay, so don't get me wrong. The RSI is a very good indicator. A lot of traders use the RSI. Okay, but we're just trying to address one issue. If you have been using the RSI for a long time, you're going to notice that there are times when the RSI is going to be in the overbought territory. You might be thinking that the price is going to reverse, but at the end of the day, nothing is going to happen. The price might remain in overbought for a long time. It might remain in oversold for a long time. Things like that, right? So if you have been using the RSI, you're going to understand what I'm talking about. So sometimes the RSI might give you false signals, but the RTI attempts to fix that. It's not as if the RTI is 100% accurate. It's not accurate, okay? The RTI is not accurate in itself, but at least there are some times that the RTI might actually give, better signals than the RSI, or at least limit the false signals compared to what the RSI is going to do. And with respect to late entries, the RTI provides better timing. And if you have experienced confused market noise, the RTI also intends to filter that out. Okay, so now let's just break down the key features of the relative trend index. But before that, I want to show you an example of what I just talked about, right? A very valid example so that we can be on the same page. I want to be sure that we are on the same page. Yeah, because I just saw something right now. Okay, now you can see what happened here. When you are using the RSI, when the RSI enters oversold, you will be anticipating a reversal to the upside, right? You can see what happened. A reversal to the upside is what you're anticipating. But guess what? The price kept on coming down, kept on coming down, kept on coming down. This trend was even a strong trend. Okay? Now let us look at the RTI. Whenever the RTI paints red, painting red means there is bearish momentum. Now, unlike the RSI that can navigate from the upper part to the lower part and back to the upper, although this didn't enter the overbought, okay? Let's be fair, it did not get into the overbought, but at least it went up. It got to the 60 level. It got to the 60 level. Although that was just a mere pullback, but a mere pullback went as high as 60. But now look at the RTI. The RTI is going to give you clearer signals because it paints red in a bearish trend and paints green in a bullish trend. So there is no confusion. You did you see that there was no green appearing throughout this place, throughout this zone? No single green appeared. This was the last time that green appeared, right? When this trend was about to shift. When the trend shift was changing, that was the last time this green appeared. Right after that, once the sell trend was confirmed, it has been red all through until a reversal happened and then it painted green, because the painting of red shows bearish momentum while the painting of green shows bullish momentum. So you get the point now. What I'm trying to say is that RSI, although it's a great indicator, but sometimes it can give confusing signals. So that's just the point I was trying to make, right? Now let's just get into some of the features of the relative trend index, the RTI. One is for trend confirmation, which I just already explained right now. It confirms the trend for you because the RTI adjusts based on momentum. So if it has identified that the prevailing momentum is bearish, it's going to stick with bearish. So your signals are going to be straightforward. Okay, you know what you're doing. It helps traders avoid mistaking pullbacks for reversals. All right. So in this case, you're going to know that these times that we had, the line go up, this was just mere pullback. The color did not change to green. It was just mere pullbacks. Okay. And then it helps with better overbought and oversold detection. All right. The RTI improves on the RSI's static 70 to 30 levels, making signals more accurate, right? And then the RTI is also perfect for Forex, stocks, and crypto traders who need better trend following confirmation. Okay. So how do you use the RTI in your trading strategy? Here are some key rules. One is to look for strong trend confirmations before entering trades. Okay. In as much as this indicator might seem to be a better alternative to the RSI, it's not 100% accurate. So always make sure you get confirmations even when you want to enter a trade. For example, we had a breakout from this support. The RTI gave us a sell signal. Normally, after a breakout happens, you ought to have a retest to validate that breakout. And you can see a retest happened here, right? And we had a bearish engulfing to confirm the continuation. So this would have been a good place to enter a sell. So make sure you always get your confirmations right. Even though this indicator had already given us a sell signal, it's good to get your confirmations before jumping into the trade. Okay. And then it's good to also use the indicator alongside other indicators like maybe moving averages or any other indicator of your choice to confirm, the signals for extra confirmation. And then check different time frames to confirm trade signals as well. So following these rules will help you avoid unnecessary losses and focus on stronger setups. Okay. Now, how does the RTI compare to the RSI? The RSI gives too many false reversal signals in strong trends. The RTI dynamically adjusts, making it more accurate in real-time markets. The RSI uses fixed levels while the RTI considers trend momentum. So that's why many traders are now switching to the relative trend index for more reliable trade confirmations. So if you found this video useful, hit that like button, subscribe for more powerful trading strategies, and turn on notifications so you never miss a new video. Have you tried the relative trend index yet? What is your experience with the RSI versus the RTI? Let me know in the comments below. Thank you for watching, and I hope to see you in the next video. Happy trading.